Firstly, if I can just start off by asking you, why healthcare? Was that a strategic or a default move?
Well, it's a really interesting question. Yeah, I mean, I didn't set out in this world thinking I was going to end up having a long career in healthcare. I ended up working for Bupa because they were looking for leaders who had people skills, had multi site experience. And my previous role was in retail, and that seemed to connect. And all of the attitudes and aspects around retail of customer service, large, diverse and disparate populations of staff, multi-site businesses, supply chain, etc., all lent itself very, very well to healthcare. And I landed in Bupa, gosh, a long time ago, early 2000s, and never looked back really. I've always enjoyed it, and yeah, I suppose fate has a way of doing these things.
We're delighted to have you here, especially given your interesting, diverse background. Obviously, housing, healthcare, health insurance in the UK and internationally. So, what I'm looking to uncover here today is both the impact and implication. We know that most healthcare providers were not strategically prepared for a pandemic of this sort. So that would have had some level of impact and implications, both operationally and financially. And also your thoughts around how investors should be strategically thinking about their investment portfolios moving forward. So let's start with understanding with your views on whether our healthcare system is actually fit for purpose.
The short answer is no, it isn't. I mean, you only have to look at the creaking of the healthcare systems, on a very regular basis. And now we're sitting here with, some very fundamental issues around supply and demand and the ability of the healthcare system to provide what a new generation, a different generation of healthcare needs are. So I think the short answer is no. Many of the lobbyists and trade associations have for many, many years been talking about how difficult it has been to be strategic and taking a long-term view around investment. And I think this is just, COVID has just accelerated some of the underlying fundamental issues that are there in the healthcare system.
How would existing operating models have been impacted and shifting as a result of this pandemic?
They've all had an impact. Financially, a lot of them have found it extremely difficult. They've had huge income loss as a result of falling occupancy. They've had increased costs around PPE, staffing costs, etc., etc. So that's really taken the stuffing out of the sector. I think also that many of them have found that, you know, issues they've had around the structure of the facilities, the way the facilities are operated, have made it very, very difficult for them to bounce back quickly. And of course, one could say we've never seen this before. We have, to a smaller degree, seen it before. There was a flu pandemic in 2015, and that actually had some of the very similar characteristics, although flu happens every year, whereas a pandemic doesn't. And I would also argue that we've had SARS and MERS, both of which were threatening to produce a pandemic and never did, for whatever reason. So it's had a big impact on the sector. You're seeing, I think, now probably a third of the traditional market probably technically insolvent because of the financial impact they've had. And the question will be how quickly can they get back up on their feet, and whether they have got the ability and maybe the will also to continue for the future.
You've just said a lot there already, so let's start unpacking some of that. Let's start with average margins for care homes and health insurers in the UK.
Very difficult to put a number on it. I mean, what I would say in care homes is it's a fixed cost business. You've got your fixtures and fittings, your building. Even if you have one resident, you need a care manager, a chef, a carer, etc., etc. So realistically, you don't cover your costs until you get to probably at least 80% occupancy. Yes, 90 to 95%, all of those additional residents, their income is largely, additional bonus. So I think, when you look at the fact that the care home sector has dropped around about 10 to 12% as a result of occupancy drop, and that's both deaths and non-admissions, you only have to look at a provider who was, let's say, averaging maybe early 80s percentage occupancy, and now we're down in the early 70s. But you combine that with the fact that you've got staffing issues, and staffing issues come in a number of different ways. First of all, people who are off because they're, having to be at home for 14 days because they may have COVID, people who've genuinely got COVID and may well be off sick for a longer period. And then you've got the fact that you need to make up those staff numbers with agency. So, you could be looking at somebody who's been making a happy, 30% EBITDA margin, and suddenly that's been wiped out almost overnight. I think it's very difficult also to say generally what it is that's a margin, because there's a whole number of varieties in here. Small homes versus large homes, purpose built versus conversions, those who are doing nursing versus residential, those who are doing more specialist sectors, say acquired brain injury, or so on and so forth. I'm a little bit out of touch on the insurers, but generally speaking, on the insurers, I think they've had largely a better time than they have in previous years. The pure reason for that is lack of claiming. When you have a pandemic, most people probably would put off having, you know, dare I say it, more cosmetic items done. They will only do the absolute essentials that mean life or death. So you won't see people taking elective surgery during the COVID crisis. And actually, the hospitals are just not available, whether they be the NHS hospitals or the private hospitals. And we can see that with things like cancer treatment, where a lot of people have said, I'm sorry, you can't come in for your treatment. You're going to have to wait until COVID is over, or we have the capacity to do it. And we've heard many stories of people whose conditions have actually declined quite dramatically. So I think the insurers have probably had a reasonable time of it. Their operating model is easier to put online. Many have already been online for many, many years. So you don't have that physical interaction that you would have previously, where your business can't continue. You can do that with an online model.
Do you think from a consumer perspective, those premiums are likely to increase now?
I'm not sure. I think there'll be a lot of pressure for insurers not to be seen to be profiteering from this crisis. And you can see it genuinely with the car insurance market, where many of them are saying, yes, we recognize that your car has not been on the road for several months and therefore has not been at risk. And therefore, reduced mileage, we should take that into account when we're setting the premiums again. So I don't think you will see that necessarily coming through in premium hikes. No, I don't think they will. I don't think they will do that.
We spoke about the drop in occupancy, and we spoke about margin. Typically, even if we take a average of 30%, does that make healthcare businesses a profitable and sustainable operating model for existing and those that probably looking to enter the marketplace?
It's a difficult question. I think if you step back strategically, the answer will be yes, because the demographics and the general underlying healthcare demand is always going to be there, and generally is growing. So elderly care, you'd only have to look up the numbers of people who are elderly and those people who will become elderly to see that there is demand for that. And I think as an investor, yes, it's still an attractive market, but as we've seen over many, many years, it's beginning to polarize. There are certain segments which are not attractive and I think have become even less attractive. And yet there are those which are probably always been attractive and have some degree of resilience and may well be more attractive in the future. And let me just sort of expand a bit on those. The local authority funded market at the moment is not great. It never has been brilliant. It's been obviously a volume driven market with relatively low margins. We've not seen strategic financial support from local government during this crisis. They have been quite happy to reflect on their own internal economics rather than looking to support the strategic continuation of assets in the market. Privately funded care homes with self-funded players have always been relatively good because they operate in a much freer market. They can establish the fees as they see fit, and they can also, if you like, correlate the fees for the services that they offer. So they generally will provide superior levels of accommodation, bigger rooms, ensuite or wet room facilities, additional services, and so on and so forth. But those homes are generally purpose built. And what we've seen during the COVID crisis is the need to have barrier nursing, the need to be able to isolate people and to care for them in a way which doesn't allow the spread of the disease into the larger care homes. Now, that is much, much easier to do when you've got more space, you've got self contained bedrooms, maybe you've got better quality of staff, maybe more staff, and that is funded largely by having better fees. And we've seen the sort of difference between the local authority average and the privately funded average just increase over many, many years. And I think going forward, we're not going to see local authorities in the funding settlement for this year coming generously offering double digits. It's not going to happen. I think we will probably see very marginal increases in line either with CPI or possibly a freeze. And we've seen that in many, many years in the past where local government had just said, we don't have the money. Therefore, we're not going to be able to increase the fees. And the economics of the economy means that they are probably not going to have huge increases in their income from either central government or from local taxation because the economy isn't doing so well. So I think anybody who's in that sector needs to be looking over their shoulder very, very quickly about what's happening. Those people who've got purpose-built, high-quality, attractive assets, I think will find themselves in a better position.
So if you enjoyed this content, please don't forget to like, share and subscribe for conversations just like this.